I challenge BitBoy to a boxing match. Welcome back to Anti-Hedge. Today we're going to be talking about something much more interesting than a boxing match with BitBoy, which is the all-time high for Bitcoin. So as you can see, we broke all-time high. Definitely love seeing that because that means that Bitcoin is on its greater macro trajectory. One of the key things that you'll notice here in this time frame of Bitcoin hitting its all-time high, you'll notice that the chart seems to be following the M2 money supply very closely. And if you look back at actually our community post 3 weeks ago, I kind of mentioned that we were coming close to a bottom. And I even took a picture over here to show you guys of me calling the bottom. I think it was roughly around the same time. It was June 13th. And you see I even circled it because we're following the chart so closely that it only makes sense that this would have been our, let's say, macro bottom for the time being. As you'll notice, we bounced back pretty well. You know, like it almost looks like we were following this exact cycle over here, which would have been the, hold on, millionaire market cycle, Wall Street's cheat sheet. We were stuck in the last few months in this era of depression and disbelief. And now we've actually started to look like we're breaking out of the disbelief and we're heading into the hope part of our cheat sheet. And this cheat sheet over here, I think is going to apply more to altcoins, more so than Bitcoin, because I think Bitcoin is actually closer to about here, the optimism/belief part. Based off of the M2 money supply, I think that Bitcoin doesn't have a lot more room to run. I think we're going to be topping out somewhere between 120 and 150 this cycle. What's going to happen is, you'll notice here something interesting is, look at that Bitcoin dominance. We finally started breaking down. That could be the indicator of our altcoin season, which is one of the main subjects of this video today. And what do you notice here when you look at dominance? There's this upward channel, drop, upward channel, and look, here we're getting ready to drop. I don't think it's a fake out. I think we're going to see basically the alts dropping down, like the dominance the alts are going to go up because the Bitcoin dominance is going to be dropping. And what you'll notice here is this is where we topped out kind of our altcoins during Trump's inauguration, and I think we're heading towards another one of those. And you'll see here, be like, well, the dominance drop and the altcoins didn't move here. I'm like, yes, that actually makes perfect sense, because this is when they were tethering up. This is when we had that big drop on Bitcoin and people tethered up. So when you see a big drop like this, not a sustained one like that, a big drop like this, where it just boom, that's usually the altcoin tether that is dominating. Meaning that as Bitcoin dominance drops, it could flow into, well, it will flow into altcoins, but it could flow into two different altcoins, which is the general altcoin market and stablecoins. I think what we saw here was stablecoin dominance rising. If there was a chart, and I'll probably find it on another video, of stablecoins going up, Bitcoin dropping down, that would probably be a great indicator to know how much of the rally is actually going to altcoins versus stablecoins. Whatever the case may be, this drop feels good. We're getting a nice breather. We're seeing altcoins rally and things are looking pretty good. Personally, the way I see it is there's an inevitability of things, I think, rolling upwards, because you'll see here on the crypto fear and greed index that things are still neutral. And because things are still neutral over here, we still have room to run. If we were in the extreme greed era, I'd be like, all right, well, we're about to see a big pullback. Or if we were in fear, I would think there might be like a big jump upwards of institutional interest, but we're pretty neutral. And neutral is a good spot for us to be because we're slowly climbing. And I think July and August are going to be good months, not just for Bitcoin, but for altcoins as well. And the momentum seems to be looking pretty good. The relative strength index is going upwards. We're still in like relatively neutral territory, not overbought yet. I think that that's kind of the general macro trend of where we're heading. Altcoin season could be starting, guys. And if it is starting, start coming up with your game plans, because I have a funny feeling that the way these cycles are going to work, it's no longer going to be 4-year cycles. I think we're going to see less volatility in Bitcoin, and we're going to have a more steady yearly growth incoming, because Wall Street tends to work like that. We're no longer trading a 4-year retail cycle. That era of Bitcoin and cryptocurrency is dead. What's happening now is we are playing by Wall Street's playbook. And if you do not adapt to Wall Street's playbook, you will be eaten by Wall Street, because wealth does not disappear, it only transfers. And what's happening is Wall Street understands that they're late to the crypto game. Therefore, the only way they could be on time for the crypto game is to transfer your wealth to them. And they're going to do that through a multitude of different ways. One of the most common is going to be Bitcoin liquidations. What's going to happen is Wall Street's going to be working with market makers to liquidate you in leverage. Hence why I don't think that leverage is a smart play, because they have heat maps for you. They know where your liquidity is. They have bots that follow it. And the bots that we have access to, you'll notice here on CoinGlass and all these different sites to get metrics, they're not even close to what Wall Street has. Wall Street knows everything down to a science. They have terminals that are designed for this. We have access to a website. Do you really think you're going to beat them? No. So leverage, be very, very careful about that, more so than it used to be, because back then, okay, you could get knocked out with volatility, but now they're hunting for you. And you'll notice that in the heat maps over here, right? This part over here, it's very hot, a lot of liquidations to be had, they're pushing it upwards. And what's going to happen is there's going to be people that are going to go long late, like probably around this region here, because they're going to think the market's going to go up, and guess what, it's going to pull back and take them out. And as it's pulling back and taking them out, there's going to be people that are going to be shorting, thinking, oh, we're about to go short, this is the time, and they're going to get knocked out going up. The market makers are sophisticated and they're working in coordination, a lot of insider trading with Wall Street. And that's how you're going to see the $3 billion here in short leverage, and then the $3.5 billion here in long leverage. They're going to do their best to take as much of it as possible. $1 billion at a time, because if they do that 100 times, it's $100 billion, and they're going to be locking that into Bitcoin and ETFs on their own time. The more they do that, the more they have control of the market. So for the love of God, do not over leverage yourselves and crush yourself, because not only are you crushing yourself, you're giving more power to the institutions that you're buying Bitcoin to avoid. You're literally giving them the power. Every time you lose in leverage, they get more power. How do you defeat Wall Street? Stop leveraging. Stop trying to beat them. You're not going to beat them. Look at the time frames from a longer perspective. Instead of trying to trade on the daily or on the hourly, really just focus on like, okay, look, see, this is the trend. The trend here says we're going to top out close to about 120 somewhere in October. That's what it's looking like based off the M2 money supply. So you can kind of plan around that. And the fact that we've kind of popped past it, that's a very good sign. I personally think we're going to be in this range, this pitchfork range. I'll show you right now. You know, and it might even be 130. Could go to 130, but we're basically in the higher end of this pitchfork. And the pitchfork here, like anywhere in the green, is basically like from here, it's pretty neutral, sell, sell, sell. And then from here, when you're going here, it's buy, buy, buy. And the red line kind of indicates it, right? Right now, we're in the position where we're trying to plan an exit strategy. When we see the market drop, if we do drop, let's say back to this range, this would be the range that you want to rebuy in. But you know, you got to redo your pitchforks every once in a while, because if the market, let's say the market trends downwards on a larger time scale, and look how much that looks exactly the same over here. On a larger time scale, you kind of want to know, look, you see here, buy, you would have made money. Here, if you're selling, you're probably going to make money in this range when you're selling. And when you're back down here, consider to buy. I would say that roughly around here is where you start dollar cost averaging in. And when you're crossing over here, you're dollar cost averaging out. That's just more or less how I'm, going to say to play it. To each their own. Each person's going to do whatever they want. But I figured I'd at least show you what I'm looking at. And I used the money flow index with relative strength index and the MACD to kind of confirm my trends, especially with this dominance chart over here, which is kind of confirming that we're seeing alts picking up. The other thing that I wanted to mention is that with Bitcoin breaking the 4-year cycle, which I really think we're going to see this year, we're going to see altcoins probably drag into 2026 with ETFs, meaning that there's a lot of ETFs that have been filed and they're in the process of being passed. They're just keeping to delay it, because I think what they want to do is they want to start really pushing the altcoins for the end of Q3 to Q4, and then to lead into Q1 of next year. What's going to happen is people are going to panic sell probably around November to really like exit their position. The 4-year cycle, we gotta get out, get out, get out, get out. What's gonna happen is Wall Street's gonna let all these ETFs out. They're gonna pick their altcoins, which winners are gonna be there. They're gonna push them up. They're gonna buy the bags for cheap of the altcoins that are being sold by the people, and then they're gonna lock them into ETFs, sell them to the boomers for inflated amounts of money, and then we're automatically gonna move the market upwards. Food for thought. Maybe keep a bag of altcoins throughout 2026, because if it plays out in a new form of super cycle, which I think it's going to be, we could be looking at Bitcoin moves up, starts to flatten, chills the fuck out, altcoins move up. Bitcoin drops as altcoins move up, and then what's going to happen is they're just going to basically be doing this. Altcoins up, Bitcoin like this. And they're just going to be going like that. They're going to be constantly intersecting each other in terms of their dominance and movement. And what that's going to do is it's going to be like a perfect rotation of capital. Meaning it's like, okay, Bitcoin tops out, we rotate into alts, altcoins are topping out, you're rotating into Tether or Bitcoin. And it's going to create like a cycle of generational wealth, like a generation of wealth. It'll be generational wealth for the people that succeed, but it'll also be like how to generate wealth on a larger scale. So I think that the most important thing for this cycle and for the next 5 years, in my honest opinion, will be how efficient you are at rotating your capital between Bitcoin, altcoins, and stable coins. That's always been a thing, but you could kind of like, there was kind of more wiggle room back then. Like you could sit in a bag of alts, make your money and leave. Now, I don't know if that's going to be the strategy long term. I think you're going to have to learn how to rotate your capital better. That's how I see it. That's how I'm trying to plan it. The other thing too, the reason why I do think we're going to end this 4-year cycle trend is because Bitcoin hit its all-time high before the halving last year, or 2 years ago now. Meaning that when the halving happened, Bitcoin already broke its all-time high and hit 70K, which is insane. Which means like anything that we've used in previous cycles as markers for indicating this cycle, you should like rethink old strategies, because old strategies don't work the same way. We have Wall Street with an infinite money glitch that is working to take your money. And I think that people have forgot that there's like sharks in the water. We were swimming in the ocean, everyone was having fun and making money in the last few cycles. Now it's like, okay, the sharks are here. And not only are the sharks are here, they're hungry, they're out for blood, and they're very upset that you had all this fun time swimming in there without them. If you want to avoid this stuff, because market makers are hunting liquidity with Wall Street in an organized fashion, I would suggest trading on longer time frames and just looking at long-term time trajectories for trades now. It's no longer about just day trading and swing trading. It's like, no, you're going to follow how the money's going to flow. You're going to look at how much money is being printed, because we're in an inflationary asset. You're going to be looking at interest rates. You're going to be looking at unemployment rates, because these are all the things that affect Bitcoin on a macro level. And I think that that macro level is how we're going to actually be able to beat the system, so to speak. I will say that I really think we're in the beginning of this altcoin season, and I have a feeling that we're going to see some good run-ups. Make sure to lock in some profits, set your targets ahead of time, even if it's a month or two ahead of your time frames. Just be ready to take profit, be ready to rebuy when things dip, and don't be fooled by all the FUD, because I'll tell you one thing, the market took a shit right before Israel and Iran had their conflict, and guess what? The market bounced back instantly. That was an insider move. There's no way no one could say it wasn't, because the way the markets reacted that day, it showed that it was a insider trade. Big insider trade. We're gonna do this, we're gonna fuck with everyone's perspective. World War III, take their money. They're gonna do any little dirty trick, including destroying other countries, to try and take your wealth from you. So don't sell to them, because if they're trying to buy it, there's a reason they're trying to buy it. All right, guys, hope you enjoyed this video. If you stayed to the end, like, comment, subscribe. Love you all.